Hello everyone, welcome back to another Robinhood Portfolio video. It's been quite some time since I've done a Robinhood Portfolio video, so I figure I better just do one right now since I'm not doing anything. If you look at my account, you can definitely tell that a lot of money has been taken out of the account, in addition to the markets not being very good. Today, I think Apple reported news about slowdown in the stock, and a lot of investors didn't like that. I think Apple went down some 7% in the after hours, and right now Apple's actually at a really, really good valuation. I still believe in the company. I still like the company, but I'm really just seeing how low it's going to really go here. 2019 is projected to be a slow year in terms of growth. So, there's things that you can do. You can either just wait on the sidelines. You can sort of just jump into high dividend paying stocks. You can buy gold. It's whatever you want to do that you feel is right. There's a lot of people, waiting for good market valuations and this and that. For the year, you guys can see that I am down 6%. So I did not beat the stock market last year. I think I was down some 5% when it went, the stock market had ended. It was ended, and going into the new year, I was down about 5%. And then today, in addition to the after hours looking pretty bad, I went down. I lost another $117. So everybody's rattled in the markets right now. There's a lot of fear. There's a lot of panic. But there's a lot of things that investors can do. They can either wait it out. They can just hold on to their stocks. They can buy gold. They can bet on the VIX if they want to. Ticker symbol, I think it's TVIX. There's a lot of things you can do, but from my approach, for my portfolio, I did take some money out. I think I took about I want to say the $2,000 to $3,000 out of the portfolio and out of the Robinhood portfolio, and I funded my M1 Finance account because I just feel like I need to really start focusing on the M1 Finance the M1 Finance app. I have a lot of portfolios going on. I just like my money to be spread out. With that being said, I took about $3K out. I think I held about $1K just on the sidelines because I'm doing a lot of moving in my life, and I am a human being, so I do need like extra funds to manage my life as far as where I'm going to go. Let's get into the portfolio, guys. I don't want to just hang around here. You guys can see that everything's been replaced. I'm taking a different position, a different perspective with the Robinhood app. We're going to just look at some of these ETFs that I have. So I've transformed my Robinhood app into a sort of like an ETF holder or something like that. I guess you can say I am looking at Bitcoin. I don't plan to buy any Bitcoin. I'm just watching it. If it gets low enough, I might consider it, but I'm not gonna touch Bitcoin right now. It's just way too volatile. There's no. I feel like there's no floor. There's no ceiling. It's just all over the place. Vanguard, VTI. If you look at my portfolio, you guys can kind of see the strategy that I'm trying to do. Vanguard Total Stock Market ETF. This is a really good ETF. You guys can see that I have 50 shares. The equity is $6,000, and the total return is I'm only up 3%. So why did I buy? Why am I buying ETFs? Well, the reason why I'm buying ETFs is because I just like the diversification. I'm a person that likes to have their money spread out just all over the place. And the thing about VTI is that initially I was looking at what's it called? Vanguard VOO, ticker symbol VOO, that tracks the S&P 500. This sort of tracks the S&P 500. So I'm going to quickly explain the differences between VTI and VOO. So VOO tracks the S&P 500 index, which is 500 stocks, 500 of the largest stocks on the U.S. stock market, and they have large caps. VTI tracks about 85% of that S&P 500, in addition to medium market cap stocks and low market cap stocks. So VTI has about I want to, I'm going on a limb here because, I'm trying to look at the holdings. I'm actually on the Vanguard side and I'm looking at the Vanguard, the performance. They give you all the information that you need, but I believe it's about over 3,000 stocks in VTI, and they are completely diversified. So when you buy this ETF, you are basically buying the entire U.S. stock market in a nutshell. Financials 19%, healthcare 13%, industrials 13%, technology is the highest, diversity at 19%, telecommunications at 2%, utilities at 3%. So you guys can see that this portfolio has over 3,000 stocks, and it's made up of all the market sectors. So basic materials, consumer goods, consumer services, financials, healthcare, industrials, oil and gas, technology, telecommunications. Very, very diversified. Some of the top holdings in the portfolio are the stocks that I like: Microsoft, Apple, Amazon, Alphabet, Google Alphabet, Berkshire Hathaway, Johnson & Johnson, Facebook, Pfizer, and Pfizer, Exxon Mobil. So all the stocks that I really like. And, I really like Apple. And I think right now in this Vanguard VTI, it has its number 2 largest holding in an ETF. So this ETF pays I think the dividend is much higher than that when I bought it. I think when I bought it, the dividend was sitting at 2%. I like this ETF more than the Vanguard S&P 500 ETF. I think it's like ticker symbol VOO. And the reason why is just because they're just much, much more diversified, guys. I feel like in time, the smaller market cap stocks will eventually go up and outpace the S&P 500. So that's the reason why I bought this ETF. It's a very, very good ETF. I like them better than VOO, and I'm really high on VOO, and it's quite expensive right now. But as you can see, it still sort of just follows that index. It's the same thing as VOO, ticker symbol VOO. For the year, it's down only 7.24%. So, I'm not expecting like huge gains out of, these ETFs. When you start following the index and stuff, you're not going to make a lot of money. You're not going to lose a lot of money. You're just going to do whatever the index does. And, some people like growth. Some people like, their portfolios to grow. And, realistically speaking, you're not going to beat the market every year. But, people who do, that's, I would say congratulations to them. It's very, very difficult to do, to beat the market consistently. With that being said, one way to, sort of just average out everything that you're trying to do in life is to bet on the index. Listen, the reason why Warren Buffett got to where he is today is because he did exactly that. He bet on the index. Before he started Berkshire, I think he's a big fan of mutual funds, and he's a big fan of the S&P 500 index, and he bet on the index. He put all his money on the index, and he waited, and he waited, and he waited, and eventually he got rich. So, he started up his firm, Berkshire Hathaway, and that's, he started going into the individual stock sectors, the individual stock sectors. So he bet on the index, and I think even Jack Bogle, and I know Jack Bogle has been really critical of these ETFs. He's been very critical of these high expense ratios for these ETFs. This ETF, the VTI, only has an expense ratio of 0.04, and it actually says it on the Vanguard site. I'm actually looking on the Vanguard site right now. That's 90% lower than the average expense ratio funds with similar holdings. So 96% lower. So what does that tell you? That tells you that for every $10,000 that you invest into this ETF, you're only going to pay $4 per year. $4, guys. So I'm getting this much diversification for only $4 per year, and I'm getting the dividends all reinvested. All reinvested right now. So you see what's going on. If the greater the risk, there's more greater risk when you're buying individual stocks. But when you buy an ETF like this and you get all the dividends reinvestment and you wait it out, you really can start compounding a lot of, goods and interest off those dividends. And, and over time, we've seen that historically the stock market goes up over time. So, that's the reason why VTI is a very, very good investment. And it's the reason why it's my largest holding. I have like 56% portfolio diversity. And most people say, well, that's really, really high. That's over half your portfolio. But you guys have to remember there's 3,000 stocks in this ETF. It's basically the entire stock market. And that brings me to my next reason why I bought the next ETF that I'm going to talk about, which is VEXUS, the Vanguard Total International Stock Market. So why did I buy this ETF? The ETF has an expense ratio of 0.11%. So for every $10,000 I put into this ETF, I will be paying $11 per year. The portfolio diversity is much lower. As you guys can see, another 50 shares. Total return $53. Of dividend yield is very, very good. It's very high. P ratio looks good. So why did I buy the Vanguard International Stock Market? Why did I buy VEXUS? Well, when you look at the stock market as a whole for the United States, the United States stock market, and then you take the United States stock market and you combine it with all the other stock markets in the world. We're talking about the Asian stock market, Japan, China, whatever. If you take all the stock markets as a whole and combine them, the U.S. stock market will only account for about 35% of that total market. So again, so if I take all markets, if I combine them, and then I just said to myself, if I would have just not bought the Vanguard International Stock Market ETF and I just have VTI, I would only have a 35% diversification across the entire market. That's the reason why I bought that's the reason why I bought VEXUS. I hope I'm not confusing people. I'm really trying to explain what I'm trying to do with the Robinhood portfolio now. You guys probably can see what I'm trying to do. But Vanguard Total International Stock Market, in a nutshell, what it does is it has emerging markets, 21% emerging markets, 41% Europe markets, 29% Pacific markets, 0.40% of Middle East, 6.60% in North America, and 0.40% in other markets. So there's a lot of Alibaba in here. There's a lot of Toyota. It's basically it's complete diversification. I would say about 80% of diversification off all the international stock markets as a whole. And when I just talked about, I said that there's the U.S. stock market only accounts for 35% of the total markets if we were to combine them. So the VEXUS is very important. We can see that VEXUS is very important because I need more I like more diversification. Some people might say this might be a little bit too diversified, but again, I'm buying the ETF. I'm not buying single stocks. So I'm buying all these stocks, percentages that go into the ETF, and it reflects off what the ETF does. And I know a lot of people what's it called? Ticker symbol VWO. I think that is another Vanguard Emerging Markets ETF. I think that's a much higher expense ratio, 0.14. I'm just seeing, reading this off the top of my head. I'm just thinking off the top of my head here, but this ETF is important because it does not overlap with VTI. If you guys get that, you guys can see why I bought it. It gives me exposure to markets outside the U.S. I like that diversification, and I think emerging markets are very important. It doesn't have as many emerging markets as, say, ticker symbol VWO or ticker symbol VT. I think it's VT, but VEXUS is very, very diversified, and I think that the combination of VTI and VEXUS will give you pretty much complete diversification across the entire globe. Very, very good diversification on Earth. So very important. I like VEXUS a lot, and it gives me exposure to China markets. It's giving me exposure to Europe and the Middle East and the Pacific region, and just very, very interesting stock. The last ETF I want to talk about is PowerShares S&P 500 High Dividend ETF. It's one of my favorite ETFs that I wanted to put into the portfolio. This ETF does pay monthly. You guys may have seen this ETF in my M1 Finance account. I have since moved this ETF over to my Robinhood Portfolio, and it does pay monthly. 65 shares. I definitely plan on buying more of this ETF. It's one of my favorites. Very, very high on utilities, real estate, and consumer staples, guys. I think utility sector is 20% weight. 20% weight on the utility sector. Real estate is 19.30%, and consumer staples is at 15%. So it's not only one of my favorite ETFs, but if we go back and we look at VTI, I talked about VTI and its diversification across the U.S. markets. And when we come to utilities, VTI has a diversification percentage in the ETF of only about 3.10%. So that's not a lot, guys. It's not really a lot of diversification in the VTI in VTI ETF. But the thing is that I think that it works well with VTI and SPHD worked well together because SPHD is very, very heavy on utilities. This is 20% weight in this ETF, and while VTI only has 3%. So in a nutshell, guys, the thing about these ETFs is you don't want to overlap yourself too much, because that's been a major complaint of mine when I'm starting to invest into the ETFs, and I know that I'm going to be paying an expense ratio, which I really want to keep low. I want to keep the expense ratios low, but when I'm making the ETFs, it's very, very important not to overlap yourself too much, because sometimes I'm looking at other people's portfolios, and I've seen this on YouTube when I'm looking at other people's portfolios. They'll buy something like VOO, and then they'll have something like, I don't know, VTI. And I'm like, well, why do you have ticker symbol VOO and VTI? Because VTI has pretty much all the stocks VOO does. So, that's a lot of overlapping there. I think VTI holds about 85% of the S&P 500 stocks in the ETF. So, you don't want to overlap yourself too much, and that's the reason why I've stick with 3 ETFs that I really, really like. All right, guys, that's going to do it. And I hope I tried to break this down and you guys kind of see what I'm doing here. I am watching Bitcoin. I'm not throwing any money into Bitcoin just yet. If it gets low enough, say around past $3,000, if it dips past $3,000, I'll definitely take a very, very hard look at Bitcoin and maybe toss in. I don't think it'll hurt if I toss in $100 and just see what happens and just wait it out. But it is on my watch list. I'm just sitting there and I'm watching it. I'm not a really big fan of the the talking here. You can post and say blah 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 or whatever, but I'm not really a big fan of that. Yeah, I'm just watching it, just seeing what it's doing, and, I just want to be aware and kept up to date. Again, the ETFs are Vanguard Total Stock Market ETF, complete diversification across the U.S. stock market. Vexus, complete diversification across the international stocks and emerging markets. Very, very good and diversified. And SPHD, just really cleaning up some of the weaknesses I saw in VTI, such as not being heavy on utilities, not being heavy on real estate, and just giving me something to compound off of. This pays a monthly dividend, and I think as long as I hold on to my shares, I think I will get about $9 every month off this ETF. So, guys, that's going to do it. Again, for the year, I am down 6%. it happens. You're not going to beat the market every year. I think last year I did, in fact, beat the market. I think I beat the market by, I think, 5%. Now I'm down 5% for the year, but I'm changing my strategies up. I have other portfolios going. This is not my only portfolio. I'm experimenting. I really like where my portfolios are headed and for the long term. That's going to do it, guys. Again, $11,095 today was not a good day, but I'm just gonna hold it out, and I am watching SPHD. If it gets down to my average cost of $37.29, I'm definitely going to add some more money into SPHD. That's going to do it, guys, and I'll see you next time.